All right, what's up, traders? How's everybody doing on this fantastic Friday? So a little bit off schedule, a little bit this week. Had a bunch of things I had to take care of, and it kind of absolutely screwed up the whole trading week for me. Today is actually the only day I've been able to look at the markets. So we're gonna take a look at some things, see if we can't find us something to trade. Mr. Bitcoin's having a little bit of a pullback, but that's all I'd call it as of right now, just a pullback. Now remember, I mean, this thing is massively oversold on the weekly time frame. You've been literally oversold pretty much since October the 23rd. There was a brief section here for 3 or 4 weeks that you did drop right back under the not oversold, overbought area, but you can see you got right back above it and got nearly up into the 90s. So, I mean, a pullback is what we need. A few more weeks of sideways price action is probably what we're going to see. We got the halving coming up on us pretty close. It's getting closer and closer every single week. I'm pretty sure the chat is broken because I can't see any messages. Oh, there's Ivan. I can't see the little faces. Ivan said good morning, so that's good. The little heart thingies over there, I don't know where they are. I can't see them. They're gone. So, sorry. Hopefully you guys can see those. But anyways, we got triple witching today. A lot of people will miscommunicate this by calling it quadruple witching. Quadruple witching is not a thing anymore. Ever since there are no longer futures on stocks, there are no quadruple witching. You just have triple witching. All right. You got the futures, you got the options, and then index products. So nothing else. So just triple witching, but a lot of volume will be coming off today. So there could be some really crazy price action today. As you can see on the Thinkorswim platform over here on the ES futures, you can see that it had a pretty dramatic drop there at the beginning of the morning. You're trading right now back up into VWAP. If we are going to have, this is your daily here. If you are going to have a downside continuation day, then I would expect up in this area right in here around the purple dots, you might get one or two closes above, but eventually you would want to see that area hold as resistance, and you would want to see price start to fall back again. That is, if you are in fact looking to either buy puts on the SPY or sell calls on, say, a micro futures contract or whatever you're looking to do. If you are looking for the short side, that's what you want to see. If you start closing multiple 5-minute candles above this, then the dip will probably more than likely be bought. This is the VWAP on a monthly basis, and you can see that it does a pretty damn good job of basically keeping price up. Each month I go, you can see, like, yeah, so we're coming down to that area now. And it does make sense that we are seeing a bounce. Now, brief also real quickly, if you look down here, bottom right, in fact, let's maximize the sell. You can see NVIDIA, it did open lower than yesterday, so it was down on the day, but it's making a fresh high of days right now. So NVIDIA has literally been the one stock propping the market up because Apple has sold off. Microsoft had a little bit of a push lower. I need to look at Microsoft. I haven't looked at it in days, so I don't know what it looks like. But anyway, with Apple and that happening, Nvidia is pushing up. So it is a possibility that we do see the S&Ps regain. All right, let me restore those cells over there. All right, so you do have the S&P pushing up into VWAP right now. All right. We were watching a trade on Capital One Financial. Let me go pull that up as it did break out of a rectangle. Let me get it off of the daily here. You can see you got a rectangle formation going on here, support down there, resistance here. We did in fact get a daily close above and then another daily close above. And then yesterday we've had a pullback. This is where I would have expected support to hold. However, price opened well under that resistance level. So if this resistance level holds today on a closing basis, I would expect price to come back down and test the 133 area. So that would be a play that I would be taking today. You can do that via put, or you can buy a put spread. but I would buy it for a long time out because you can see that it has been choppy for a long time, right? Since you had this last big strong push in January, it's literally been sideways ever since. Now, this is not all-time highs, which is important because if it was all-time highs, you have more of a chance of an actual breakout bullish play happening. But since it is not all-time highs, I did let everybody know in the Discord that we were going to keep an eye on this to make sure that it doesn't end up becoming a bull trap. And so far, right now, the way it's trading, it does look like, in fact, it is trying to do that. However, if the S&P regains and becomes bullish again, maybe that'll help pull this out. You do have a daily support right there, so it's pretty close to where it opened. Right there, right? So, I mean, it is possible that it does ultimately close back above that resistance, and that's what I want to see for any bullish continuation. So that's what we're kind of looking at on Capital One Financial. If we go over here to Apple, Apple is struggling. We had a very nice bullish day here. It was a profitable day, but it's been trading sideways since it had that day. And you can see that it literally looks like it's trying to roll back over. This isn't good for bullish continuation. I generally like to see, a couple good strong up days, like something like this, right? As we're pulling back here, pulling back, we set in a support zone. I want to see that bullish continuation for a few days before you ultimately get to pull back. Here, you really didn't have any bullish continuation. You were able to break above this weekly support zone right here and close several daily candles above it. But today you opened at it and traded above and then got rejected. So for right now, at least, it does look like it's struggling. I still like Apple long term as a buy down in this region, but we have to be careful because Apple could ultimately make a push down here for this swing low. All right. But ultimately, this thing does look like a cup and handle formation on a longer term. Let me get it here if it'll just pull up for me. It definitely looks like a cup and handle formation. I mean, this would be your cup, and then this is going to be your handle. So, I mean, there is a possibility that Apple does find support ultimately and then starts moving back to the upside. I'm glad that they stopped playing with electric cars. I mean, they're a computer company. I don't understand why they even started that venture. But it would be too hard for Apple to retool everything and be able to make electric cars at scale like Tesla does. It's just, yeah, it's too much. So just stick with what you know. Maybe invest in technology, to help move your company forward. And I just don't think electric cars is that. So I was glad to hear that. However, price is not doing what I would like to see it do if it was in fact finding support. We did not see any rise in volume as it was. We did see some rising volume down in this area, which is why I was kind of looking for this to potentially be the low or the bottom. And the next, what I was looking for is an area push up to 179.45. You got the open here and this bullish candle there. So I would at least expect a retest of that. So that's almost a $10 move from down in these prices. So if Apple closes the way it looks right now or above either one of these two white lines, 171.21 or 170.73, I still will kind of like it to the upside. I mean, it is possible to have a pullback after you have this little move here, but essentially all you did was fill the gap, and it looks like price is rolling over. But this could be luring bears in, if you will, making them think that it was just nothing more than a gap fill, and then price is going to continue on with the trend. However, we know that, markets don't usually trend. They usually go sideways. And Apple, even though it does look like it's, rolling over, to me, it looks more of a range than it does anything. So let me show you this, and then we'll move on. So if you just simply place a line there and then a line up here, you've got a massive range. All right, with 2024 yearlies open up there at 187.15. So I mean, it is down on the year, but it can always catch support. But if it loses this support down here, then I would no longer be looking to buy it, because that could smell trouble for Apple, and it could ultimately push to this next huge swing low down here in the 150 region. Bring over the S&P 500 real quick so you can see it is absolutely struggling at the VWAP here. So is the NASDAQ. Give it a little bit of time. Don't rush into an entry. But yeah, that's what we're kind of watching right now. Let me see here. Other trades. One trade that I am in is AU. It is a play on gold. Let me get rid of the volume down here. As we did see gold have a massive push to the upside. Damn it. We did see gold have a massive push to the upside, and it does look like it is turning into a bull flag up here at the all-time, or the last all-time highs that were put in back on December the 4th, 2023, when you had that rejection. So breakout above. If it holds support here, I like it for further upside. Further upside. And then one last thing, pound. It did break out above our trend line. We've been watching this trend line for years, literally years. I first brought this trend line up to, people that were trading around me back in them days, Jan 21, because literally this trend line has never seen a quarterly candle closure above it. Now that is only on the log scale. If you take the log scale off, this trend line literally means absolutely nothing. All right. But on log, it does mean something still. And it will mean something until you finally do get that quarterly breakout and close above. That could help the pound be strong, breaking out of a trend line that has held for so long, right? We could see a nice upside push, or at least get some bullish continuation up to the next resistance level up there around 135. Now, there are multiple resistances probably before you get to 135 on like the weekly, but on the quarterly, 135 is roughly right in this area. That's where I would expect it to push if it does in fact break out above this trend line and continue. It is even struggled to get above it and stay above it on a weekly closing basis. Here, back in May of 2021, you were able to close 3 weeks above, but then ultimately you fell back under and then traded sideways. And yeah, the story told itself. Once it finally did break down below this swing low, it was see you later. You just got a massive drop down where people loaded up on the short side there. But there were also other things happening during that time, macro things, to cause the pound to do that. And then ultimately oil looks like it's breaking out to the upside, which can be very, very detrimental to CPI. If oil continues to move higher, it is going to make the headline CPI number higher. It does affect inflation. All right. So if oil does continue to push, that's going to look like we're going to see more inflation for longer. And that could ultimately hurt indexes like the S&P and the NASDAQ in the long run. All right. So I think there's a lot of attention on energy right now, specifically oil, but the energy sector as a whole. And you can take a look at the energy sector as a whole via XLE. Notice this huge push, right? It doesn't look anything like oil, but oil is a huge part of this sector. So this is moving higher. Now, obviously, this sector can help the S&P 500 stay up, but I think it's going to require tech, because most of the rally that we have seen in the S&P 500 has come from tech. And we can prove that because we can go to an equal weighted S&P 500, where tech isn't heavier weighted, basically, is what that means. It just means every stock inside of it is the same, has the same weighting. And if we do this and pull it back here, come on, internet, you can see that you're just barely making all-time highs right now, right? So this means, the rest of the market has been picking up, but tech was the main sustainer of the rally. So if we lose tech, it's hard to say what's going to happen. So we will probably see that sector rotation from, like, I don't know, maybe into industrials or something like that. So just keep an eye on that. If you start to see the financials fall and then you see like the XLI or whatever start to pick up, then we could see rotations going in there. And we'll see what happens. And right in here, you can see it's getting a very strong push here lately. This is defensive. This is a defensive push here. All right. So just keep that in mind. But overall, I mean, it still looks good for a secular uptrend. I'm not saying that I'm expecting the S&P 500 to roll over or anything. I'm just saying, inflation higher for longer could absolutely at least make it stop trending high, right? Just every day making fresh all-time highs, like it seems to have been doing for the last several weeks, 19 weeks to be exact. 19 weeks is a long time to be trending to the upside for anything. In those 19 weeks, you only had 2 weeks of downside closings on the SPX. Go to the weekly here, and it's just insane. All right, so last week it did close as a doji. So 3 bearish weeks inside of 19 weeks. That's not typically what you see, right? Typically what you see is it goes up a much slower than that. But NVIDIA's meteoric rise, along with Meta and other tech stocks, literally helped push this thing to heights. So it looks like Microsoft did rebound the last few days. Nice. So last time I looked at Microsoft, I think it was Monday. So you did get a nice rebound there while I was busy. That would have been a nice play. However, but you see the same thing going on. There is a breakout here, fresh all-time highs. This is the resistance that needs to stay above if you are going to see bullish continuation. I do not want to see a daily closure below 415.13, or I would look for a trade back down to 401. So here is the S&Ps right now closing 1 5-minute candle above VWAP. I will keep an eye on that. Looks like NASDAQ struggling, but NVIDIA looks like it did ultimately is trading at the high of day still. So I think NVIDIA is going to affect the market pretty much today. So however NVIDIA goes, that's probably the way the rest of the market would go. And you can see NVIDIA just basing out, making what looks to be a bullish continuation formation. A lot of people are going to try to short this. Obviously, it's made a massive move to the upside. This is nothing more than a short squeeze. People thinking that it went too high too fast. Obviously, everybody's trying to short it, and it's just continuing the rally higher. I would not be surprised one bit to see it tag $1,000 before it ultimately rolls back over, or gives a few weeks of sideways trading like we got down here, right? Where it was literally choppy. So I think you've had the run that's pretty big. So I mean, I don't know. We'll see how it plays out. The last thing that I know of as far as like following politician trades, Nancy Pelosi, was PANW, which is Palo Alto Networks. She ultimately bought as this thing pulled back on earnings. And it does look like it has found support here. So, I mean, if this is going to continue to go up, if it's going to continue to be bullish, then you could potentially look to be a buyer around 278.86. But the same thing goes, I do not want to see a closure below 261.97. And a heads up, this thing moves. The options move very fast on this. So it'd be better if you could get a spread going. A bullish spread. If you could, that would be better. Let me pull it up. I don't think you can yet. Oh, let's go see what the skew is doing. Skew is still elevated, so that probably means well, I mean, you can, but you're going to pay over $2 for it. It's a $5 wide spread. Ultimately, you'll pay $2 for it with a maximum return of $300 for it. I mean, it's up to you, right? I put these things out here for you guys to whether if you want to take them, you can take them. But it does look a little bit weak. And if the markets are about to start to be sideways, then that could really affect this, as it is a tech stock. It is in the NASDAQ, so it is considered a tech stock or a tech play. But it's hard for me to think that Nancy Pelosi would get involved with this if she didn't know that it was going to go higher, right? Because we know that that woman, well, I can't say that legally. I don't know for a fact, but it is funny that politicians are allowed to trade stocks, and it is funny how they do so good, right? It's like Nancy Pelosi buys calls on Nvidia, and then boom, Nvidia goes up to the freaking moon. So we'll see how it plays out today. Triple witching, I wouldn't doubt it if we did close as a red day today. But ultimately, we'll have to see what happens. And obviously, that can have a little bit of influence on tech. Oil is absolutely trying to maintain its bid. You can see oil is just having a very small pullback day right now. But I mean, we did get the breakout here, and then it traded sideways, and it looked like it was going to roll back over, and then boom, out she goes. So just keep an eye on oil. I think higher oil will definitely cause the stock market to slow down a little bit. IWM, we were looking for a breakout. We ultimately did get the breakout, but it did not last very long, and you pulled right back into the range. So you can see that's happening across several things that I've been watching, right? Nike, no, that we wanted, what was it? It was McDonald's. We were looking for the short on McDonald's around 298. You can see ultimately that did play out. However, I missed it. I was unable to stay in it because I jumped in it on this day here and then ultimately got stopped out on that day. So I didn't wait for it to tag resistance, which I should have. I just didn't. I figured it would probably stop right around this area. And it had one more daily push above. And then ultimately it rolled over. And then it caught it, right? That little area there. If I bring it down, you can see what I'm talking about. Right there. So ultimately, yeah, I was expecting it to stop right in this area. But it did have one more push higher. But that would have been a nice trade as it is coming off now. However, this thing was structured bullish. I mean, you were trading at all-time highs. So it's difficult to short something when it's got a nice, huge trend. Now, Bitcoin. I know Bitcoin's why most of everybody watches the channel. We're down 3% or almost 4% today. But I would just say, hey, watch the 4-hour closes. We got a lower one here. And it looks pretty decent as this was resistance. And then it held on this pullback there. I mean, you did get some volatility, some big, thick, long wicks to the downside. So, I mean, just keep your eyes peeled on that area around 67,000. And if this area holds a support, then you could potentially look to get long again. But just remember, I mean, you're buying a very overbought market. Obviously, I know that it can remain overbought for much longer. I obviously know that, right? I've been doing this a long time. It's hard for me to buy stuff that's massively overbought because it's just literally the FOMO trade. Everybody that missed out on the rally, you know what I mean? Like, this was a perfect time for people to get involved in the Bitcoin. When it was basing out at the yearly opening range, we discussed it literally in depth while it was here. I literally said, if you're bullish, you want to buy it here. If you're bearish, wait till it starts to trend under that. Then look for short entries. But as long as you're above this and you're above all the major moving averages, it's a long. You look to get long. And that's what happened, obviously. And then obviously 2023, we also got long then. So those were the two times to be a buyer. Last year and the very beginning of this year. Buying up here really doesn't make much sense to me unless you honestly believe that Bitcoin's going to $150,000. But usually once you start see people making these insane, crazy, high expectations of where the market's going, that typically is generally been the top in most scenarios. And we are getting that everywhere. I mean, people are totally ignoring their very simple technical analysis. Very simple analysis. On the weekly, you are massively overbought right now. Only 3 times in history has Bitcoin been this high overbought. Here, and then here, and then now. So you're stretched out there. You are stretched out. We will see if it's able to maintain a rally or not. I would love to see a bull flag built in on a weekly time frame. I'd love to see this thing trade sideways for multiple weeks, 4, 5, 6 weeks of sideways price action, right? That would be good. That would be healthy. It would look better. But I will still be a buyer of Bitcoin as long as it's trading above the yearly opening range. So literally Bitcoin, in my opinion, could pull back all the way to here and I would still be a buyer. I would still be a buyer. Now, if Bitcoin starts to make weekly closes under this price, then I would probably not be a buyer. And it's simple. That simplifies your analysis. That way you don't have to ask yourself, what do I do? What do I do? What do I do? You don't have to get freaked out and you don't have to worry about nothing. As long as you're managing your risk on these positions that you're taking, you don't have to worry about getting blown out from massive volatile moves. I mean, we had one candle that moved almost, $7,000? Very volatile. Very volatile. This hourly candle goes from 71,000 all the way down to 67,000. So be careful, right? This thing is moving. It is moving. You can see you can have very sharp, dramatic pullbacks. So that's kind of what we want to see. Very sharp, dramatic pullbacks. I don't know if I'd be looking to short it. I would just be waiting for support to build in and then potentially get long to buy it. So now that it's made a 4-hour, depending on how it closes, let's see, how much time is there on the 4-hour? So you got 55 minutes left on a 4-hour close. If you close above this area right here, 68-ish, what, 68,570? 68,387. Then maybe on a retest of this price with a stop under that wick could be a trade to the upside. Right? Because this would be a demand candle in a sense. And you've only got an hour to wait to see if that happens. A close under, then obviously you leave it alone and you look to buy either the support area on rebounds, not on tags. You don't just wait for price to tag it and then get long. You wait for price to trade under it, rebound back above it. Then you try your hand at getting long. Because sometimes, even then, you're still going to get stopped out. Just make sure you're using stops. Make sure you're not risking more than 1% of your trading capital. Because without trading capital, you cannot take positions. And positions is what we need in order to make money. So my trading this week has been very, very bland. I was watching Aussie dollar for a long. Which day was it? Or which? I think it was right here. Right here. I tried to get long at daily support and it worked out. Price traded all the way back up to here, but it was nowhere. It wasn't far enough, like close enough to my profit target. So it stopped me out. So like one trade on FX, it failed because dollar automatically started to get strong based on the CPI. I'm assuming it's based on CPI. It didn't happen on the day of CPI because this was the day of CPI. It happened 2 days after. But ultimately, if this trend is going to resume, which way is it going? It's going down, right? For now. So right now, the dollar still looks more bearish to me than bullish. And I've stated this many times. Based on the moving average structure, yes, it stayed above the moving averages for a long time, but price can do that. So there's your 200. So literally price stayed inside of this box for a very long time. But if you focus on the moving averages themselves, you can see the purple 200 is on top. The 100 is below the 200. The 50 is below the 100. And now, since these 2 bearish days and these 3 days of sideways, the 21, which is the fastest moving average, has crossed right back through all 3 of them. So this is literally structured how? Bearish, right? So we are still bearish on the dollar. If we break above this trend line and start closing dailies back above all this stuff, I would need to see a daily closure above 104.27 before I really honestly believe that there's even a possibility that the dollar hits 105. All right. But right now, the structure looks bearish to me. It's sideways and in a range, obviously. But if it is going to start to trend, that trending direction to me still looks lower. I mean, this is triple witching, and you look how small that daily range is on the dollar. Crazy, crazy stuff right now. So yeah, I would probably be looking to still get long the euro and even the pound, right? Or this, you could short this. The BOJ needs to intervene before this will even matter for a short, in my opinion. Until the BOJ actually does something, this carry trade is still very attractive to the bullish side. So if you think the dollar is going to be bullish, then you want to Or you can trade like my friend James Stanley does. You can pick 2 long dollar plays and 2 short dollar plays, right? That's the way he does it. He trades longer term, more. He's less of a day trader. He's more of a swing trader, but he'll look for setups for like 2 long dollar plays and 2 short dollar plays. For instance, he might like 2 long dollar plays by getting, or short dollar plays by getting long Euro USD and getting long pound USD on a setup, and then look to short Aussie USD, USD JPY, or USD CAD. You see what I'm saying? Like that way, you know, if he gets himself positioned correctly, obviously, well, 2 of them are going to be wrong, 2 of them are going to be right in the long run. There's many different ways to do it. I would be very, very, I'd be very cautious about getting short Aussie dollar, and the reason is gold. Okay, gold affects Aussie dollar a little bit. So if gold is going to remain strong, then the Australian dollar could remain strong. It's not like guaranteed to stay correlated, but they are correlated. Like when gold rallies, a lot of time the Australian dollar will rally as well. So as long as gold is rallying, and make no mistake, gold is rallying right now. It is literally consolidating these gains. This is a bull flag, right? That's literally what this is. I stay bullish on gold all the way down to 2078. If we get back under the 2024 yearly opening range, then I will become bearish on gold once again. As long as we're above that, I have to be bullish, because the yearly trend, even though it's fairly young in the cycle, being 3 months in, it is still bullish. Right? It is still bullish because you're literally trading above the open of the 2024. So that's the way I am going to be situating myself moving forward, I should say. Heath has a massive arms and jack calves, but his neckline pencil. I don't know what that means. Good morning, Monk Amok. Good morning, Johan. Good morning, Brian. Good morning, Bravo, Dougie. I like that flag at 42K. I hope we get the same thing as 68. Yeah, hope isn't a strategy, but I understand what you're saying. Obviously, every time I take a position, I hope that it works out, right? But I mean, I got my risk situated to where I'm not going to allow myself to lose more than 1% of my total capital on no matter what position I take. Sometimes on crypto, I'll let that go a little bit bigger. Like I'll take a 5% loss, but I'm risking so much less money, right? So like I don't keep a whole lot of money on the week's exchange, and I'm trading on the week's exchange because that to me is the only way to trade Bitcoin. Why would you trade Bitcoin any other way? If you want more Bitcoin, the best way to get more Bitcoin is to trade yourself into having more Bitcoin, not by settling in US dollar or your state's currency and then buying Bitcoin. Don't do it that way, right? Just trade on the inverse swap contract. You don't have to use leverage. You can literally trade with just your money and still do good. But that's the way you are able to. That's how I built my bags with Bitcoin. I didn't buy them. I didn't take like all my profits from trading and buy Bitcoin. No, I traded my way into having a massive Bitcoin bag. That is literally the best way to do it. And it is hard to find an exchange. And I don't know how long Weeks will allow U.S. citizens to trade on their platform, but for now they are allowing it. So if you want to do it, there is a link in the description, and you will save 20% on all trading fees if you use that link. There is the S&P 500. You can see that VWAP did ultimately hold for now. And it does look like we are trading 5 points off from ultimately that 5 minute closure there. So right at 5,200 and the VWAP, and it's pulling back. You've actually traded 10 points. So this is very volatile. This would normally be just a couple points of a move. This is actually a 10-point move there. That would literally be day done. All right, but we'll see if it finds itself back out of there or not. But moving back into Bitcoin, yeah, it's it's a pullback for sure. But I mean, to me, I think like I don't know if this is gonna happen again, right? But it could. I mean, the inflows going into those ETFs is insane. I've seen graphs all over Twitter showing literally how the inflows are doubling almost every month. And that is definitely helping Bitcoin spot price to go up. So the ETFs are doing what everybody wanted them to do, is to put buying pressure into Bitcoin. And with the halving coming up, a lot more people know about the halving now this time around than they did previously. So that is also going to cause a lot of buying. But just remember, there have been cycles where we had the halving and Bitcoin had vicious pullbacks that lasted for weeks. So just be careful, just manage your risks. That's all I ask. As long as you're managing your risk, you will ultimately be fine. Keep your eye on oil. I think literally that's the only thing that we really have to worry about. But it being an election year, I do not think you're going to get above $93. And that's because oil is literally, the U.S. can literally sell so much oil or put so much oil on the market right now. To sell it back down. I mean, I would assume that's probably what happened here. Boom. Get that CPI number down to make my election numbers look good, so I can be in office for the next 4 years. It's just a way for them to pad the books, if you will. Make the economy look better than it actually is. Food prices are still very expensive, and gasoline is still very much expensive. Rents are expensive, housing prices are expensive, literally everything is expensive. It's much easier to do things years ago than it is today. So I understand why everybody's so pissed off. Especially the Gen Zers and millennials. So it is going to be tougher for them for a while. But if they play their cards right, they can invest their money instead of getting their hair done and nails did every week. That costs what, a couple $100, $300 every 2 weeks. Like, instead of doing that, why don't you just use natural beauty and invest? Invest that $300 every other week. Be much better off in the long term. All right, let me get off this rant. Good day, Mr. Ed. Not a lot of questions. I thought the chat was literally broken there for a bit, but it seems to be fine. It does look like the stream may be lagging a little bit. I apologize for that. Literally nothing I can do. Let's go look at Mara real quick. The reason Mara is struggling, why isn't Mara making fresh all-time highs with Bitcoin? Well, that's simple. The block rewards are about to be cut in half. Mara already does not make money as a company. As a Bitcoin mining company, they do not make money. I don't know how that's possible, right? I don't know how it's possible, but it is. It is very much possible, and it is very much the case. If you look right here, their income is minus. Wait, now it's positive. Wait, that's wrong. Hang on. Not even, I just looked at this not too long ago and they were way in the hole. Maybe they fixed it. Who knows? It's still spinning up. Let's just pull a new one up. If we can. We might be at the part of the stream where we have to end it. Yeah. It doesn't look like it's going to pull up. All right. So we'll just take any quick questions that anybody has real fast and then we'll wrap it up. Just remember, I mean, you're better off buying Bitcoin instead of mining companies and stuff. I understand that these things do move more quicker, you know, they're better to play with, I guess, but ultimately they're harder to make money on. I think you would have much better luck trading the Bitcoin ETFs if you don't want to trade Bitcoin itself, right? They're cheap. Right, you got one right here at BRRR, which is $20 a share. I mean, literally, that would be a good way to trade Bitcoin, right? Now, there's probably fees associated with just getting long BRR at $19, but at the same time, you know, Bitcoin is extremely overextended right now, according to the RSI. But it can continue to stay overextended as long as there's demand for it. And if that demand continues, then it's who knows how far this thing can go, right? Nobody knows where it can go. Nobody knows where it can go. But you can use the same technical principles that we use on every single thing else. Well, you're not going to be able to get the yearly opening range because unfortunately this thing opened 11 days after the yearly open. But we can look and see by using Bitcoin where that would be, can't we? Of course not. All right, we'll do it the other way then. We'll compare BRR. R. Ooh, I did it wrong. Give me a second. There we go. All right, so here's the yearly open on Bitcoin. So you could probably say this little squiggly line here would be close on BRR. That would be close to where the yearly opening range would be. It's not exact. It doesn't have to be exact. You could just pull it down like, say, let's call it this. As long as you're trading above 1270, you're in decent shape. Or you could use percent metrics if you want. How far are you in percentage terms are you away? So in percentage terms, you are 61% above the yearly opening range. %53. 69%. So a little bit lower, right? So right in there. 1229. We'll mark that and call it good enough. Right? As long as you're above this, you're good. Below it, things start to look a little bit more ugly. Can I take a look at ETH? Yeah, sure. I mean, Ethereum's been blowing up with Bitcoin, obviously. I mean, just a huge run. The problem with ETH is it didn't make a fresh all-time high. So Bitcoin is definitely leading Ethereum right now. Is that always going to be the case? Not necessarily, but it is the case right now. You can see that there. So basically, we've got a monthly support right here. Maybe this is where Ethereum finds support and then starts to gain more than Bitcoin. Monthly support right there. So watch it around 0.05239 Satoshis. If it holds a support, then maybe you could look to get long on, say, Ethereum USD in expectation that Ethereum is going to outperform Bitcoin. But right now, Bitcoin's outperforming Ethereum. Ethereum doesn't have the bullish drivers that Bitcoin does. Ethereum is literally moving up because Bitcoin is, right? That's generally how it works. Bitcoin is usually the tide that lifts all boats, if you will. Ethereum being a boat, Bitcoin being the tide. Whenever Bitcoin raises, these things rise. Bitcoin falls, these things fall. But I mean, you've got daily support on Ethereum coming up. Could you buy it there? If it holds, you got to see support build in. It's got to hold on at least a day or two before you could say support actually held. And there's no shaming in buying after a support doesn't, right? Like here, for instance, that support did not hold as you had a day close under it. But then this day closed above it. So you literally could have bought the close of the day, put your stop under that red wick, and boom, you made like 10 to 1. I don't know if that's going to happen again. Things are getting very volatile. Notice the different size of the candles. The higher you get, the bigger they get, right? Even the downside ones. Like, look at this monstrosity. So we're at those prices where things are going to start getting really, really volatile. Volatility is good, though. Volatility is when you make the most money. So we like volatility. We love it. But getting positioned well for that volatility is the hard part. Because sometimes those supports are not going to hold. So you don't want to take more than one try, right? Just in case it doesn't hold. You try once. Get your support or your stop loss low enough so you can maintain potential volatility. And then if price does resume back to the upside, you'll be situated perfectly for it. But yeah, it's coming off pretty good. I don't think it's the end, but we'll see, right? Only time will tell. There probably are no weekly supports. Yeah, there are no weekly supports. There's no point in even looking at the monthly, as you're just going to have one huge monthly and one smaller month. But yeah. Oil currently struggling at the highest hourly close at 81.60 or 81.53. S&P 500 is pulling back, going back up towards VWAP once again. And euro looks like it's found support, potentially. Let's go. All right, so that's the way it's going to be. All right, so we'll see if we're going to keep our eyes on euro, open on euro to see if this thing ultimately does find support and hold. I mean, this does look like a legit breakdown, but you got to remember this thing is trending more to the upside, and as far as technical indicators go, trending indicators go, this looks okay. Remember, it is sideways, but still, I have to be more bullish than bearish on this, not based on macroeconomics, but based on technical indicators. And they don't always work, obviously. But I am going to be watching support. Maybe Monday or Tuesday we'll get a retest of this support and we can look to get long here, as that's a pretty nice little correction at weekly resistance. Absolutely beautiful, isn't it? Now, if you look at this candle in comparison to last week's candle, this just looks like a pullback, doesn't it? Like you haven't taken out last week's low. You're not even close to it. So I still like euro for long opportunities next week. Maybe not today, but next week. All right. If there is no more questions, I guess we'll wrap it up there. Next week, we'll try to get back on schedule with the live streams. Thank you guys for your patience. I really appreciate it. Obviously, appreciate the ones that always come to the live streams. Thank you very much for that. And for all you that watch the replay, thank you so much. Make sure you guys trade safe. Well, if you have any questions, obviously you can drop them in the comment section. I read them all, always answer them, and I'll respond to you. If you have any questions, just put it there. And for the rest of you that are in the